Welcome back, ladies and gentlemen. Let's talk about how to swing trade penny stocks. I made another video today talking about how to swing trade regular stocks because regular stocks are very different from penny stocks. Penny stocks, way more volatile. They can move 10, 20, 30% on a whim, and you have to trade these differently. Buying penny stocks at the bottom is even more important. You never want to chase a penny stock, let alone buy at the top of a penny stock, because you might end up buying at 6 cents and it comes down to 1 penny, or you buy at 50 cents and it comes down to 1 penny, or you buy at 10 cents and it comes down to 0.006. Like, you never ever ever want to chase penny stocks. The best thing you can do for yourself is you want to grab your rectangle tool or your rectangle tool, and you want to identify where are buyers stepping in. Where do buyers always step in? Where do we see buyers just be more than happy to buy cheap shares? And we've identified that here. You'll notice since the beginning of this year, this stock has been holding above 0.08, and it's been holding there for 4 months now. And every time we come down here, someone is buying. A lot of people are buying. So what does that tell you? That tells you that we've identified when we should buy it, where we should set our limit order. And so now we've identified, okay, where do we buy? We've identified where we buy. ILUS, ILUS, another penny stock. You notice something interesting? This one's pretty easy. You want to buy nice and cheap down here. Buyers always seem to be stepping in at around 1 penny to 1.2. Like, this is where buyers are stepping in. This whole area here. People are more than happy to buy at 1 penny. This is a steal. Buyers look at this and go, oh my god, I am going to continue to buy every time it comes down here. That's why it's holding this pattern. And so that's penny stocks for you. It is even more important to buy when it's cheap, and you want to identify where that bottom is. And so we've identified the bottom on two stocks. Okay, the next step is, okay, what's our stop loss? Stop loss is very important for penny stocks. You do not want to hold a bag on penny stocks. But stop losses for penny stocks, because these are so much more volatile, you have to respect the fact that it's going to jump up and down and fluctuate 10, 20, 30%. So for something like QYND here, let's say you bought in at 8 cents. No, wait, that wouldn't make sense. Let's say you bought in at 10 cents. You wouldn't want to set a stop loss at 7. You would want to set a stop loss at around 6.5. You don't want to. You got to give it some room, because it might come down as low as 7 and then bounce and then go up on a huge green candle. So 7 is like 6.5 is the bare minimum. But even then, you can go as low as 6 cents. But obviously that means if you lose, you're going to take a 40% loss. You've bought at 10 cents. But the reason you put it down here is because, again, you want to protect your account. What happens if it just starts trending downward and it goes to zero? Well, all those people just lost a ton of money. You only lost 40%. It's still going to hurt, yes, but better than holding that bag, like I said, from 50 cents to a penny and be down 99% on the position. That is absolutely a reality. It's happened so many times, and that is why it's important to have a wider stop loss, because you have to take into account the bigger volatility that comes with trading these penny stocks. You got to give it some breathing room. Unfortunately, that means you will take bigger losses. If you put too tight of a stop loss, I mean, it could knock you out. Yeah, you'll take a smaller loss, but it'll take you out. It can take you out pretty easily with how volatile these are, and you don't want that. And now, as for profit taking, you want to see where the top of the where's the top? Where's the nearest top? Here's your nearest top up here at 14 cents. So that's where you would want to take profits. You would want to place a sell limit order at around 14 cents. And I'll mark this with green for profit. So this rectangle just means, hey, this is where we want to buy. Stop loss is here, and here is our take profit. You can do that with any penny stock. If a penny stock doesn't have a bottom, then don't buy it. Just that simple. You don't want to buy a penny stock that has no bottom. If you can't identify that rectangle, there's no point. You're just gambling. And I'm gonna use, wow, Fisker died. Holy crap, that stock died. I was gonna show you an example of a stock that literally died. Okay, here's an example. This stock is called Mullen Automotive. You notice something? Wow, it just keeps going down, doesn't it? It doesn't stop bleeding. It just keeps going. Where's the bottom on this? There's no bottom. It just keeps going down. You wouldn't want to touch something like this. It just keeps going down. You do not want to play something like this. You look at the difference here. Yeah, it came down, but now it's just been going sideways for months. AITX, another example of a penny stock that I bought in because it's bottomed out. You can identify it here. Here's the bottom. Ready? I'm going to show you. It's a pretty wide bottom here. Here's your. This one's pretty wide. Right here, this whole area, just buyers always step in. They always step in between the 002 area. And if you want to flip it, I mean, you can sell it at around 003. But if you're patient, you can wait to see if it gets an explosion to 004 or more, and you can easily make 100%. Your stop loss would have to be at like 0017 just to be safe. And there you go. That's really the most important thing with penny stocks is that stop loss. You just never want to hold it back on these. You want to respect the fact that hey, these can go down 99%. Happen so many times, and people hold it all the way down instead of taking the L and moving on. And some people take the L when they've already lost it all and wish they had taken it. Wish they had used the strategy. Honestly, I think there's no such thing as a strategy without a stop loss. At that point, you're just hoping. Alright guys, that's it for the video. This is how you swing trade stocks. You want to identify where buyers are stepping in. Where do they like it? Where are buyers frothing at the mouth to add a position? You want to jump in with them. You want to set the stop loss so you're not like them holding a bag as it goes down lower if it does. And on top of that, you want to be ready to take profits before everyone else because everyone runs to the exits when they're ready to take profits. And that is it for the video. I'll see you guys in the next one.